Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Well, today we're going to have a look at Greece. In particular, we're going to look at Greek bonds. They're in the news, they're in the newspapers, they're on television, and they're up, they're down. Is it something you want to own? Do you want to buy it? You want to sell it? Do you want to hang on to them? These are the questions we're going to have a look at today. Greece is a handful, especially for the German and French governments, because the debt in Greece is massive. I know there's been many articles. Let me give you some of the basics. The total debt that Greece owes is about $350 billion. That's almost 2 times the GDP of the Greek nation. So it's a lot of money. Can they pay it back from what the Greek government earns annually? No, they can't pay it back. Hence all these renegotiations, restructurings of Greek debt. If you want to buy Greek debt, you'll pay about 42 cents on the dollar. Great. If they go to par, if they go to 100 cents on the dollar, you'll not only have had the coupon on the bond, but you'll have had the capital appreciation from 42 to 100. Home run. You'll not only have made hundreds of thousands of dollars on Greek debt, you might decide to go to Greece and celebrate and have an island vacation. But that's not the question is, are they going to repay those bonds? And I don't know that the answer is clear. I would say, no, they're not going to repay the debt. They don't have the money. The restructuring money that comes from the German government, comes from the French government, comes from the Eurozone, is essentially repaying their own banks. Look at it this way. Most of the debt of Greece is held by French and German banks, the big banks. They're the ones on the hook. So if Greece goes into default, those banks write down the debt to nothing, to half, to a third, whatever it is. You're writing down $100, $200 billion in equity out of French and German banks, you're going to be in a bad situation with the banking system. Next up is, so the question is, Greece over a long period, 20, 30, 40 years, yes, they could pay back the money that they owe to the Eurozone. But the question is, we've got an economic slowdown, we've got a new government in Greece that's a left-wing government, socialist government that doesn't see a need to bail out bankers in Frankfurt or in Paris. So there's not a good feeling going on. So while 42 cents on the dollar looks like a bargain, well, we're always looking to buy a dollar for 60 cents, 50 cents on the Investment Advisor. But in this case, we may be paying 42 cents for a bond that's worth 10, 20 cents on the dollar. That's what's not clear. So I would say, if you're thinking of investing in Greece, maybe take a nice vacation in Greece, maybe go to a Greek restaurant in London, in Paris, or wherever it happened to be, maybe in Moscow. But for actually speculating in the debt of the Greek crisis, I think leave that to the governments. And my fear is that in this case, the governments in Greece, in Germany, and Paris may get it wrong. It's all the time we have today on the Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.